In this video we're diving into the world of women, the stock market and investing. We'll be discussing the history of women and the stock market, and covering some of the basic concepts and terms that you need to know to get started with your own investing journey. What is the stock market? The stock market is a global marketplace where stocks are traded on exchanges around the world. It's a way for companies to raise money from investors by selling shares of their company, and for those investors to then buy and sell those shares from each other. All of this trading activity takes place on exchanges, like the NASDAQ, NYSE or London Stock Exchange, that are open during certain times of day. The stock market is an organized marketplace where companies can issue and trade securities such as stocks, bonds, derivatives and other investments. It enables people to buy and sell these securities at prices determined by supply and demand forces in the market. When a company wants to raise money, they will go public by offering shares of its business on one or more exchanges, like NASDAQ or NYSE, which means that anyone who's interested in investing can purchase them. That company's stock will then be listed on an exchange where it can be bought and sold by traders all over the world. The price of a company's stock fluctuates based on investor demand. If lots of people want to buy it, then its price will go up. If not many people want it, then its price will go down. As an investor, you can buy these stocks for your portfolio when you expect their price will increase over time so that when you eventually sell them you'll make a profit. Investing in stocks gives us access to potentially higher returns than what traditional savings accounts offer, which means more wealth building power as well as helping us take control of our future finances both now and later down the line when we retire with our investments intact and thriving. Women and the stock market. Women have a long history of being excluded from learning about investing in stocks, and it's time to change this narrative. Let's take a look at why and how women can get involved in the stock market. Historically, women in many countries have been denied access to financial education because of their gender. Laws were created that actively barred them from owning property or signing contracts that included trading stocks. It wasn't until more recently with women's suffrage that more progress was made in providing access to financial education. Besides these laws, there were social stigmas as well that prevented women from getting financially educated. These dated ideas were rooted in an assumption that women weren't interested, capable or trusted with money matters, and these misconceptions still exist today. But thankfully we're seeing more and more women taking charge of their finances. And who could blame them? Investing in stocks is one of the most powerful ways to grow wealth over time since you're taking advantage of compounding returns, aka when your earnings generate even more earnings. This can result in a large nest egg for retirement or for any other large purchase you might be planning down the line. Important terms to know. One of the most alienating things about the stock market, and finance in general, is all the jargon and lingo. When a beginner approaches learning to invest, they're often intimidated by all the terms and decide to forego learning. Here's a breakdown of all the important terms you need to know to understand the stock market, and what they mean. Stocks. Stocks are shares of ownership in a company or organization. When you buy stock, you become a partial owner in that company. You may benefit from their success through dividends or growth in share price. Dividends. Dividends are payments made by companies who have made a profit. Depending on the type of stock you own, you may receive periodic payments from the company which are based on the number of shares you own. It's important to note that not all stocks give dividends. It depends on the company itself. Bonds. Bonds are loans made by investors to governments or companies for a set period of time at an agreed-upon interest rate. Bonds can be used as an alternative investment option when compared to stocks for those looking for more guaranteed returns with less risk involved. Mutual funds. Mutual funds are pools of money from various investors which is managed by professional money managers who invest this money into different types of investments such as stocks and bonds. Mutual funds offer diversification as they typically contain hundreds if not thousands of different stocks, which can reduce risk when investing over time. Index funds. Index funds track a specific index such as the S&P 500 or Nasdaq Composite Index, which makes them passively managed investments, since they don't require any active management decisions like other types of investments do. This makes them one of the lowest cost ways to gain access to many different companies with minimal effort required on your part as an investor. How to invest in the stock market. When it comes to investing, it all starts with setting goals. Take a few minutes to think about what you would like to achieve by investing your money. Do you want steady income? Are you looking for long-term growth or are you planning for retirement? Setting clear goals will help guide your decisions and give you direction on how best to invest your money. Once you have your goals set, there are several ways you can invest in stocks. You can purchase stocks directly from a company, buy mutual funds which pool together money from many investors, and purchase stocks through an online broker, advisor or app. Each option has its own advantages and disadvantages depending on what kind of investment strategy works best for you and your financial goals. Finally, when investing, it is important to diversify. That means spreading out investments across different types of stocks, bonds and other asset classes that fit into your overall financial plan. Diversifying can help reduce risk because if one investment does not do well, others may be able to offset those losses or even make up for them. It also allows investors who don't have a lot of capital or knowledge on picking individual stocks to spread out their risk over a variety of investments without having to pick each stock themselves. Investing in the stock market can be intimidating for beginners, but with a clear goal and understanding of how it works, you too can become an investor. Taking control of your finances and learning how to invest is an empowering step toward achieving financial freedom. If you're ready to start taking control of your finances, download our free personal finance cheat sheet today. Be sure to also subscribe to our channel, and stay tuned for more personal finance videos.